In 2001, the IRS floated an idea. What if the government just filed your taxes for you? It already had every form: the W-2s your employer filed, the 1099s your bank filed, your investment statements, your mortgage interest. The math was already done. But before the IRS could build anything, the private tax preparation industry, led by Intuit, the company behind TurboTax, made a preemptive offer. Let us provide free filing to Americans who qualify, they said. And in exchange, the IRS would promise to stay out of the software business forever. In 2002, the IRS agreed. The Free File Alliance was born, a consortium of 14 companies that would offer no-cost filing to Americans earning below $66,000 a year, later raised to $73,000. On paper, this covered about 70% of American taxpayers. In reality, it was the most successful lobbying maneuver in American tax history. The government had handed over an entire market worth billions of dollars in exchange for a promise it had no mechanism to enforce. TurboTax Free Edition was not free. Not for most of the people who used it. Intuit's commercial product, the one that charged $60 to $130, lived at the top of its website. When you searched for free tax filing on Google, you were directed to TurboTax's homepage. From there, the company's interface was designed to lead you toward the paid version. The product that actually qualified under the free file agreement was hidden in a different corner of the website, labeled differently, requiring extra navigation to reach. It got worse. Intuit paid to suppress its truly free product in Google search results. The company ran an advertising campaign called Absolute Zero, free federal and state filing, while hiding the fine print that excluded most filers. Users who reached the checkout page after an hour of data entry would discover a charge they had not expected. Starting over was the only way out. 4 million Americans who legally qualified for free filing paid Intuit anyway, an average of $29 each. They simply could not find the door. The math is not complicated. Americans spend $13 billion every year on tax preparation. The average filer pays $270. For a person with a single W-2, no investment income, and a standard deduction, the simplest possible return, the $270 buys nothing except the privilege of entering data the government already has. Intuit earns approximately $3.5 billion annually from TurboTax. H&R Block earns $3 billion. Jackson Hewitt, Liberty Tax, TaxSlayer, a full industrial complex exists to solve a problem that other countries solved decades ago at no cost to taxpayers. In Japan, the tax authority mails you a pre-filled form. You review the numbers. If they are correct, you sign it. Done. The same system exists in Germany, Denmark, Sweden, the United Kingdom, and Australia. The IRS collects the same data those governments use. Every employer files a W-2. Every bank files a 1099. Every brokerage files a statement. The government already did the math. You paid $270 to watch a private company do it again. Between 2006 and 2022, Intuit spent $25 million lobbying the federal government. Their stated target: any legislation that would allow the IRS to prepare or file returns directly on behalf of taxpayers. Bills proposing free government filing were introduced and killed repeatedly. The Tax Filing Simplification Act. The Return Free Filing Act. The IRS Free File Act. Each died in committee. Members of the House Ways and Means Committee, the committee responsible for writing tax law, received Intuit campaign contributions in the legislative cycles when those bills were active. The Free File Alliance agreement itself contained a structural clause: so long as the program existed, the IRS would not build a competing free system. It was a contract that the government had signed, guaranteeing its own permanent absence from a market it had helped create. Intuit was not alone. H&R Block, the American Institute of CPAs, and the National Association of Tax Professionals all lobbied against free government filing. They framed it as protecting small businesses and consumer choice. What it protected was their revenue. In 2019, ProPublica published a series of investigations into TurboTax. Reporters Justin Elliott and Paul Keel obtained internal Intuit documents. They found that the company had deliberately manipulated search results to hide its qualifying free product. They found training materials instructing customer service representatives to steer users away from free filing and toward paid versions. They found that the dark patterns had been built intentionally, not as an oversight, but as a revenue strategy. The Federal Trade Commission opened an inquiry. Apple briefly removed TurboTax from its recommended apps list. And then all 50 state attorneys general joined a coalition and filed suit. In May 2022, Intuit agreed to pay $141 million to settle the case. The company admitted no wrongdoing. 4 million affected users received checks averaging approximately $35 each, reimbursement for charges they had paid to file returns they qualified to submit for free. TurboTax revenue the year of the settlement was $3.4 billion. The settlement represented about 4% of a single year's income. Intuit stock rose the day the settlement was announced. The 2022 Inflation Reduction Act included $15 million for the IRS to study a direct free filing system. Intuit called the idea redundant. H&R Block called it government overreach. The tax preparation industry spent millions lobbying against what was, at that point, still only a feasibility study. In 2024, the IRS launched Direct File, a pilot in 12 states. It was simple, free, and operated entirely within the IRS website. 140,000 Americans used it. Satisfaction rates exceeded 90%. Average filing time was under an hour. The IRS expanded Direct File to all 50 states for the 2025 filing season. Intuit's advertising compared government filing to letting the IRS be your accountant and your auditor simultaneously. In early 2025, the Department of Government Efficiency recommended eliminating Direct File as a spending reduction measure. The program's operating cost was $5 million per year, less than Intuit's annual lobbying budget. The program was shut down. Americans were returned to paying for what they had briefly received for free. Here is what this cost you. The IRS received your W-2 from your employer. It received your 1099 from your bank. It received every financial form anyone filed on your behalf. By mid-February, the government knew your income, your withholding, and what you owed to the dollar. You paid $120 so that a private company could enter the data into a form and send it back. The $141 million settlement worked out to $35 per victim. TurboTax generated $3.4 billion the year those checks were mailed. For decades, Congress received campaign money from the industry it was supposed to regulate. The IRS signed a contract guaranteeing its own absence from a market it could have served. The program that made filing simple, Direct File, was built, used by hundreds of thousands of people, rated excellent, and then ended. The answer to why Americans pay to file taxes when the government already has their information is not complexity. It is not bureaucracy. It is $25 million, a contract, and a lobby. That is the receipt.